Good morning, guys. This is Kenzo Xtrahot Forex. So let's go straight to our daily analysis. And it's Wednesday, guys. It's Wednesday. So what's really happening today is it's that day where we have high impact news. You can easily see that, yes, we have around 8 o'clock in the evening, by the way, we're going to have interest rates from the US, and I'm expecting them actually to grow these interest rates. But before we push to the analysis, we have to understand how interest rates work, not only for US or maybe for all countries. I want you to understand this for all countries, because this economic news or high impact news, they come every month, almost every month, right? But per year, actually, it's 8 times. So I actually asked this AI just to create the simplest answer for you. So since we are not in a hurry, I'm going to read this for you and also make you to understand how interest rates work. I hope maybe you're willing to understand this. So let me start. I will start from this point here. So let's see. It's Bart AI, obviously it's Google AI, so it's quite simple. So there is information out there that you're supposed to use, actually. So let's see. It says the federal funds rate. Remember, this actually explanation will actually work for any other country. If maybe it's Australia, South Africa, Europe, this explanation, it will cover all those countries. So let's say I will start. Let's say imagine you have a lemonade stand and you make $10 a day. You need to buy lemons, obviously, sugar and cups. So you only have $5 left over at the end of the day. That's your profit. Did you hear that? Let me repeat that. Imagine you have a lemonade stand and you make $10 a day. You need to buy lemons, sugar, and cups, so you only have $5 left over at the end of the day, and that $5 is actually your profit, right? So let me continue. The federal funds rate is like the price of lemonade. The Federal Reserve is the lemonade stand. I hope you understand that. Let me repeat that. The federal funds rate is the price. The rate is the price of the lemonade, right? But the Federal Reserve is the organization, right? It's like the Federal Reserve. Let's say the bank, actually, but it's the Federal Reserve is the lemonade stand. And the banks, we're talking about the small banks. The banks are the customers. So the Fed set the price of lemonade, which is the funds rate. Actually, it's the interest rate, and the banks decide how much lemonade to buy, how much money to lend. If the Fed sets the price of lemonade too high, which means it will be like increasing the rates, right? No one will buy it. The same thing happens with the federal funds rate. If the Fed sets the rate too high, banks won't borrow money from each other. This means that there is less money in the economy, which can slow down the growth. On the other hand, if Fed sets the price of lemonade too low, everyone will buy it. The same thing happens with the federal funds rate. If the Fed sets the rate too low, banks will borrow too much money from each other. This can lead to inflation. Inflation is like prices go up, which is when prices go up too fast. I will explain that, actually. The Fed wants to keep the economy growing, but it also wants to keep inflation under control. So the Fed changes the federal funds rate to try to find the right balance. So here's a simpler way to think about it. A low federal funds rate means that it's cheap to borrow money. This can help businesses grow and create jobs. If the rates are lower, let's say the rates are lower, like maybe let's say 4 years back, things were actually easier. It was easier for people to take loans, to start up new businesses. And then once you start new businesses, obviously it means you'll be creating jobs, right? Because the rates are lower. You see, but since the rates are lower, it means there is so much circulation of money, which means there is so much money in the hands of the customers. So that creates some other products or things to go up because people, they can buy very quick, very easy. So it creates inflation. Prices start to go up. You see. So a high federal rate means that it's expensive to borrow money. This can help to slow down inflation. So like now, remember around 2020, governments or economists, they tried to give people grants or stimulus packages. So there was so much money all over the place. So that made other things to go like seriously expensive. So oil, food, everything started to be expensive because everyone had money, you see. So, and that pushes the price to go up. If you can see on your line, let's say you start to have like 100 customers, obviously you're going to increase the prices because you can see, oh, people, they're buying this thing. Then once you do that, you're keeping the price up. We call that inflation. It's going up. So the government has to do what? So the central bank or federal rates or the Reserve Bank, they have to make sure that they increase the rates because actually money comes from the banks, right? So once they increase the rates, it means it's going to be difficult for banks to loan money for themselves, also for the customers. If you're going to loan cash, it's going to be expensive. So which means people, they no longer buy that much. When you go to the dealers like auto, like where they sell the cars, everything, the percentage is going to go up when you borrow the cash. So it's going to be, they're trying to slow that. And if there's no one who is buying those things, automatically the prices will start to go lower. That's why we see economists now trying to do what? To increase the rate so that the prices can go lower. You know, when you go to the store 2 years back, something it was $5, now it's like $7. In my country, like something it was 20 rands, now it's like 25 rands, something like that. So now it's expensive. So, but if there is no like enough people buying those things, automatically that is gonna go lower because you want to make people buy those things. Or maybe if it's a stock, obviously those things, they will expire. So you have to cut the prices. But this thing just goes up and down. I hope maybe you understand. Let me see. Oh, 8 minutes. It's very long. Sorry guys. Very long. I did not actually plan to make that longer like that. So what I'm going to do here is, since it's very long, I'm just going to do very few pairs. Very few pairs. What I'm going to do is I'm just going to check GBPJPY, what's really happening on GBPJPY. Guys, I actually did that for you. It's not like maybe I just want you to prolong this video, but it's for you to learn. Maybe someone, I know 2 people, they're going to learn something. So please don't forget to smash that subscribe button, like, share with your friends if you want to be part of the team. It's actually $39 until month end. $39. You pay once, it's lifetime. This price is going to change when the market, month end, or when we reach the number that we want. So on GBPJPY, we can easily see that yes, the market is doing what? The market is actually on a very nice uptrend. The market is actually uptrending. So what do we expect here? We expecting the market to do what? To still push to the upside, especially when the market is still respecting this. So when we go further there, you can easily see that yes, we have a structure that we can also call a support area. The market tried to slow down a little bit so that we can actually have another chance to do what? To buy. So what I'm going to do here is I'm not going to buy where we are now. I'm just going to wait for the market to come around this area before I look to the upside, before I look for a long position. Or maybe the market will break this structure. We have a horizontal support or a diagonal support there. I'm expecting the market to, if the market breaks, I will be expecting to actually sell. So let's push to the next one. Already we took a very long, guys. Already it's very long. So we are on gold. What's really happening? Gold is actually on a very nice uptrend, guys. You can see that the market is actually on a very nice uptrend. So where we are now, I'm expecting later on, guys, this is my expectation. I'm expecting to see the market going actually a bit lower. I'm expecting to see the market going a bit lower. So what's really happening now is we had a very nice structure and the market was pushing to the upside very nice. We also have a very nice support area. And then the market broke out of this. You can easily see that we had this structure since yesterday. So around this area, the market actually showed us that, you know what, guys, I'm actually consolidating. And now it seems like the market broke out of that. So the market was actually consolidating. So I'm still expecting the market to do what? To shoot lower. Now the market might try to push up, but I'm still expecting a very nice push to the lower side because they're going to increase the rates later on. So for now, we can just relax. Let's not do anything for now. Even on my side, I did not actually send any signal yesterday. So I know there's people who can say, Kenzo, we did not receive anything. Is everything okay? Yes, everything is okay. When we expect high impact news, we try to stay out of the market. That is actually part of risk management, applying risk management. Plus, mostly when we have this type of economic news, which is going to happen later on, I will be on a live session. Mostly, the market doesn't really move that much, you see. So now on Euro USD, on US30, we can easily see that, yes, the market is doing what? The market is still pushing to the upside. But since Monday, we never had any crazy push to the upside. You can see here, this is 4 hours time frame. You can see this move there is just a smaller consolidation. But what I know is the market might end up pushing lower later on before maybe we see a push. But the most important thing, guys, as we already know that maybe they're going to increase the rates. So it means the most important thing is going to be the press conference. When Jay Powell is going to say whatever is going to say, what will happen next, that is going to be the factor that is going to push the market whether to go aggressively low or aggressively up. Mostly during the news, the market might not spike that much, but gold, I know gold can actually spike. If they increase, I'm expecting gold to push lower actually. But now we are on US30. I'm not expecting much. I'm just expecting the market to consolidate, and we're still going to trade that. But during the day, guys, let's be honest with ourselves. Let's follow the trading plans. During the news or when we expect news, those 2 days or 1 day before that, we are not supposed to be active because the market can just go up and down. Plus, actually, it's happening on our major pair. Tomorrow, it's also Europe. They also going to release their interest rate. So just imagine Europe and USD and just check the pairs that goes with those pairs. So you will understand that the market was just playing games, you see. So let's push to the next one actually, which is actually NASDAQ. Please guys, don't forget to smash that subscribe button. Like, share with your friends. So what's really happening on the NASDAQ? We can easily see that yes, the market is still pushing to the upside. We had some earnings yesterday. I did not even check what's really happening. I will also check if maybe they released some very nice moves. Some nice earnings. but I am not expecting any move until the interest rates. That is the most important thing. So you can easily see that, yes, the market is doing what? The market is actually doing what? The market is actually pushing to the upside. Where we are now, the market tried to push to the upside. We have something like this. Let's go a little bit closer. You can easily see that, yes, the market also created another support around this area. So the market yesterday did try to push to the upside, but I did not want to entertain this because the market can just go lower at any time, you see. So around 8 in the evening, then is going to be a time where I will say, you know what, maybe now it's time for us to do what? To look for those buy positions, or maybe the market will break here and then sell. But the most important thing is FOMC conference. If we can wait for that, I think you don't have to worry about anything. So for now, I'm not going to give any signal. I'll be waiting. We're going to go live and I'm going to update you from there. So don't forget to smash that subscribe button if you want to be part of the team. It's $39. So just WhatsApp me or Telegram me. So I will just hook you up. Thank you very much. This is Kenzo Xtrahot Forex. Bye.